A major shakeup tonight at Boeing after a string of scary incidents involving the aircraft. The company's CEO announcing today he will step down.
China has told its airlines to halt deliveries of new Boeing aircraft as well as parts.
A storm is brewing in American industry, and it began with a quiet decision that few noticed at first. Boeing, once a proud symbol of U.S. innovation, announced it would move part of its aircraft production to Mexico. It sounded like a simple business move, but inside Washington, it felt like betrayal. Within days, the White House struck back with fury, threatening a 200% tariff on any aircraft built outside U.S. soil. Suddenly, Boeing's survival and national loyalty were being questioned on live television. But behind the headlines, the real drama was unfolding far from the cameras. In a private phone call between two men whose words could reshape an entire industry. One represented political power, the other corporate strength. Their exchange would ignite a conflict that reached across borders, testing not just a company's strategy, but the balance between politics, pride, and survival. The phone call that set everything in motion lasted less than 15 minutes, but its echo was powerful enough to shake markets across continents. Late that evening, President Trump called Boeing's CEO, Kelly Ortberg. What began as a tense discussion over jobs and production quickly turned into a clash of pride. The president demanded that Boeing keep every aircraft line inside the United States, warning that American companies should build American planes. Ortberg, calm but firm, pushed back. He explained that Boeing had been bleeding billions, more than $23 billion in total losses since 2019, and that shifting part of its work to Mexico was the only way to stay competitive. Both men understood what was at stake. For Trump, it was about national power and protecting his campaign promise of Made in America. For Ortberg, it was about keeping Boeing alive in a world where Airbus and China's COMAC were expanding fast, capturing new contracts and leaving Boeing behind. When the call ended, there was no agreement, only silence thick with tension. Within hours, word of the confrontation began leaking through Washington. Advisors briefed reporters, markets reacted, and investors braced for impact. Inside Boeing's headquarters, Ortberg's team prepared for the fallout, knowing the story would soon go public. What had started as a private conversation was about to ignite a national storm, one that would pit corporate survival against political will and drag the entire aerospace industry into turmoil. The White House response came like a lightning strike. Within 24 hours of Boeing's plan leaking, President Trump announced a 200% tariff on any aircraft built outside U.S. borders. No American jet will fly home with foreign parts, he declared. Markets instantly trembled. Boeing's stock plunged nearly 14% in a single trading day, its sharpest fall since the pandemic crash of 2020. Suppliers froze contracts. Analysts warned the tariff could add over $12 million in extra cost per plane, threatening to erase years of recovery efforts. Inside factories from Seattle to Wichita, workers watched headlines with disbelief. Many feared layoffs, while others saw the move as patriotic justice. Politicians lined up on both sides. Some praised Trump for defending U.S. manufacturing. Others warned he was risking one of America's last great export industries. Meanwhile, Airbus shares jumped in Europe, as investors bet the chaos would push airlines toward its models. For Boeing's leadership, the tariff wasn't just a policy, it was an existential threat. The company relied on global supply chains stretching from Japan to Mexico, with more than 1,200 foreign suppliers providing critical components. Rebuilding all of that domestically would take years and billions in new spending. As the political firestorm grew, Boeing tried to calm investors, saying its commitment to U.S. jobs remains unwavering. But confidence was already slipping. The 200% tariff had turned one corporate decision into a symbol of economic nationalism, and the shockwaves were only beginning to spread beyond Washington. Beijing's reaction came swiftly and brutally. Within days of Washington's tariff announcement, China imposed a 125% duty on all American-made aircraft. The move hit Boeing right where it hurt most. China was its second largest market, accounting for nearly 1/5 of total deliveries. Overnight, orders worth more than $20 billion were frozen. Dozens of brand new jets sat idle in warehouses from Seattle to Shanghai, their wings wrapped and engines cold. The impact rippled far beyond Boeing's balance sheet. Hundreds of suppliers, from engine manufacturers in Ohio to aluminum producers in Kansas, saw contracts canceled or delayed. According to the Aerospace Industries Association, more than 45,000 U.S. jobs were suddenly at risk. In Everett, Washington, a city built around Boeing's massive assembly plant, local officials warned that tax revenues could collapse if production slowed further. For Wichita, once called the air capital of the world, the news was devastating. Small contractors that built cabin parts and fuselage sections were forced to lay off workers within weeks. Financial markets turned anxious. Boeing's quarterly revenue forecasts were slashed by analysts at Goldman Sachs and J.P. Morgan. The company's global deliveries dropped 17% year-on-year, while Airbus saw a surge of new orders from Asian carriers seeking stable suppliers. Even China's COMAC began to fill the gap, quietly signing new deals across Southeast Asia and the Middle East. As planes sat grounded and shipments stalled, the trade war was no longer just about policy. It was visible in empty hangars and silent factories. Communities that had relied on Boeing for generations now faced an uncertain future. Yet amid the turmoil, Boeing's leadership refused to fold. A bold new strategy was already being shaped, one that would take the fight far beyond America's borders. With sales to China frozen and U.S. tariffs squeezing profits, Boeing's leadership faced a choice: retreat or adapt. Kelly Ortberg chose to fight back. In early 2025, he unveiled a bold plan to redirect hundreds of aircraft originally meant for China and the U.S. toward fast-growing markets in Southeast Asia, South Asia, and Latin America. New deals were struck with airlines in India, Indonesia, and Brazil, where passenger traffic was rising more than 8% a year. The gamble worked. By the end of the first quarter of 2025, Boeing's deliveries had climbed from 83 to 130 aircraft, while revenues jumped 18% to nearly $20 billion. Demand from Vietnam's Vietjet, India's Akasa Air, and Mexico's Volaris helped fill production lines that once risked going silent. Investors saw a glimmer of hope, and Boeing's share price briefly rebounded 9% in April. But the turnaround came with challenges. Profit margins remained razor-thin, and supply disruptions continued to delay key parts. Fuel costs had surged nearly 30% since the start of the year, raising concerns about future orders. Competitors weren't standing still either. Airbus had just announced record deliveries, and China's COMAC was expanding its C919 production to meet regional demand. Still, Boeing's pivot proved the company was not ready to surrender. Its jets were flying again, this time over new skies and new continents. Yet even as sales returned, questions lingered. Could Boeing truly recover its reputation for safety and reliability? Or was this rebound only temporary before another storm? For all the progress Boeing had made abroad, one obstacle still shadowed its recovery: trust. The 737 MAX disasters of 2018 and 2019, which killed 346 people, had left wounds that years of apologies and redesigns could not fully heal. Even after the aircraft's return to service, fresh incidents reignited public fear. In early 2024, a mid-air panel blowout on an Alaska Airlines 737 MAX forced an emergency landing and once again raised doubts about Boeing's safety culture. Investigations revealed deeper flaws: rushed production lines, weak quality control, and a corporate culture prioritizing speed over precision. Regulators tightened oversight, and by late 2024, the FAA had stationed full-time inspectors in Boeing's main factories. The company's Starliner spacecraft also struggled, suffering from fuel leaks and thruster malfunctions that delayed NASA missions. What was once a proud symbol of American engineering now faced growing skepticism at home and abroad. Airlines began diversifying orders, wary of delays and technical issues. Airbus seized the moment, delivering over 800 aircraft in 2024, its highest ever, while China's COMAC expanded deliveries of its C919 jet to Indonesia and Malaysia. Boeing, meanwhile, managed 528 deliveries, still far below pre-crisis levels. Inside the company, engineers and executives spoke of rebuilding credibility one plane at a time. Ortberg promised that safety and quality will define Boeing's future. But confidence, once lost, does not return easily. As competitors surged and investors demanded answers, Boeing's greatest challenge was no longer political, it was moral. Boeing's fight with Washington soon became more than a corporate dispute. It turned into a symbol of a deeper global struggle. Across industries, from technology to autos, governments began demanding loyalty while companies fought to stay competitive in a borderless economy. Apple faced pressure to bring production back from China. Tesla expanded in Mexico and India despite political criticism. Even Ford and GM were forced to rethink where to build cars as new tariffs reshaped supply chains. The numbers show how complex that balance has become. Nearly 40% of global manufacturing today depends on cross-border components, and US corporations earn more than half their revenue overseas. Each political order, each new tariff, shakes that web. What started as a trade dispute over aircraft now mirrors a wider question. How much independence can corporations keep in an age when economics and national security have merged? Boeing's experience exposed that tension with brutal clarity. To survive, it had to think globally. To stay protected, it had to appear patriotic. Every major company now walks that same line. Investors demand growth, politicians demand loyalty, and markets punish hesitation. The storm that began inside Boeing's hangars now circles the entire world, from chip makers in Taiwan to car factories in Mexico. And beneath it all, one truth remains. The future of business will depend not only on innovation or profit, but on how wisely companies navigate the shifting winds of power and politics. Boeing's story has become a warning for every global company caught between politics and profit. One decision, one tariff, one phone call, and decades of stability vanished overnight. The company that once carried America's pride into the skies now faces a different kind of turbulence, where power, loyalty, and survival all collide. Yet through crisis and confrontation, Boeing endures, adapting, rebuilding, and searching for balance in a world where borders grow tighter and ambitions grow larger. The storm hasn't passed. It's only moved higher, into the same skies Boeing helped shape, and must now fight to claim again.